Hello, fellow traders. 'Tis I, the Rumpled One. Monday, January the 21st, the year 2019. Let's talk trading. It's MLK Day. Ye shall overcome. Now, I'm not making this political, but I want you to think about overcoming and what that means and what you have to overcome as a trader. Before you started trading, believe it or not, you most likely had some beliefs about trading. It's hard. You have to be really smart. You have to be good at math. You have to learn a whole lot of stuff. And these are all beliefs. And you had them before you started trading. Then as you got into trading, there were even more beliefs that you probably assimilated, accumulated, made part of your internal dialogue. You have to know the trend and support and resistance. And there's different time frames you have to look at. And that anything below a certain time frame, that's just noise. And there's, short-term, medium-term, long-term trends, and on and on and on. And all these beliefs basically direct you along a certain path. And it should be obvious that if it's true that 90 or 95% of traders lose, that you don't want to be on that path. So that's part of what ye shall overcome is all about. You have to overcome all of those beliefs. And I've put out a few videos about trading myths. Those myths, those things that are conceptual in nature as opposed to real. And I believe last week I put out a video said, getting it right, getting direction right. Because that's really, if you get direction right and you have money management in place, how can you lose? I mean, you might lose a little bit. You lose what you're willing to risk. But overall, if you're getting direction right, chances are you'll have an opportunity to take profit. Now, if you let that profit slip through your fingers, that's on you. If you're greedy, you had 10 pips, but you want 20, and then you wind up stopping out, that's on you. I'm sure there was price action that told you to get out of that trade. You just either A, were not paying attention, or B, you were getting greedy and you just ignored what the market was telling you. So ye shall overcome. Now, when I put out the video last night, we had a couple of pairs that hadn't filled. Now the gap's filled. Did you take advantage of it? Ye shall overcome those beliefs that when somebody shows you something that works and works day after day and week after week, and you don't believe it, you don't do it, you fail to take advantage of it. Are you trying to reinvent the wheel? Or are you of the belief, well, if it was that simple, or that easy, everybody be doing it? Well, trading is not necessarily easy. It gets easier as you get some experience under your belt, right? But it's simple. I mean, chess is simple. You learn the moves. You can learn the moves in about an hour, right? But it takes a lifetime to master chess. Same thing with trading. You can learn how to click the mouse, but it's going to take you a little while to learn and adapt and adopt things like money management, and the fact that if you just trade with price as it crosses a line, chances are you're going to have an opportunity to take profit. So once again, for the week, the gaps have filled. And for the year, you can see right here, we're just 1 pip below that daily open. We still don't have much of a range because it's a holiday, so trading's going to be light. And you can see here the first day of this week that we put in the high and the low. So far, we've stayed within this tight range. So expect something to give later on in the week. Still below the last 12 day, first trading day of the month opens. Still within the first trading day of January's range, the high and the low. Excuse me. And you can see here, we're still above that inside bar, and there's still plenty of inside bars to take advantage of here, and some weekly, and we've actually got a monthly inside bar on the euro. On the daily, once again, not much range happening today. Only 3 pairs over 100 in range, high minus low. And you can see here we're just right at the open. There's the weekly lowest open on H1. We just had it this hour. I just noticed something. I should put the distance on that indicator. And once again, we're right here at the daily weekly open. You can see price has spent most of its time above the open so far. So let's see what happens. Oh, I did have a question. Somebody wanted me to explain the rat zone, and they wanted me to explain Larry live trade. The Larry live trade, that's kind of a joke, because see, some people talk about, say, oh, well, you know, yeah, in hindsight you can say this, and they call that Harry hindsight. So when I see something happening right here on the screen, I'll call it a Larry live trade. Even though by the time you see the video, it's come and gone. But the point is, as I'm making the video, you know, I'm making this call here. So right now we've got a cross going above the D1 open. So that is a Larry live trade, trading with candle color here at the line. So by the time you watch this video, an hour or two may have passed, if not more, and then you can see where price went and whether or not you had an opportunity to take profit. Because that's all we're talking about when we trade, is we want to get the direction right. We have our money management and risk management in place, and did the market give us an opportunity to take profit? Rat zone explained. Right now, we don't really have a rat zone on this pair, but I think we had a, what was the pair? Was it pound New Zealand? I think had a huge range. Yeah. So rat zone explained. Where the rat zone came from was, I was looking at daily charts. So I was looking at daily charts, and I noticed that the wicks on the daily chart seemed to be big. So what I did was, actually, this isn't the right frequency distribution, but I looked at the frequency distribution of the size of the daily wicks, the high minus the top of the candle, and the bottom of the candle minus the low. And I noticed that more often than not, the wicks were bigger than 20. And I made that observation on the pound dollar. So I ran it, I looked at all the different pairs, and I noticed that, some of the pairs definitely had somewhere around, 80%, 70%, 60% or more times that the price did not close within 20 pips of the high or the low. So that's how the rat zone was born. Now, why do I call it rat? Well, there's a study was done, and they gave these Yale students this little test, and the Yale students, they were supposed to be smart, so they came up with all these algorithms to figure out whether the cheese would be on the right side or the left side of a maze. You'd go down this maze, and then there was a dead end or a T. You had to go left or right, and depending on your choice, either you got the cheese or you didn't. Well, the Yale students got it right about 52% of the time, whereas the rats got it right 60% of the time. Because what happened was there was a weighted coin or a weighted way of determining whether or not to put the cheese on the left side or the right side. And if I remember correctly, they put the cheese on the left side 60% of the time. So the rats always turned left. Every time they go down the maze, they turn left. And so they won. So this is called the rat zone because you want to pick a single direction. You either always want to be a green rat or a red rat, because if you try and be both, then you're a Yale student. So if you're always choosing to go long, chances are, 60% or more, you're going to have a right call. So you want to enter your trade here in this area if you're a green rat, and in this area if you're a red rat. So you see right now a Larry live trade opportunities coming up. If we get a red close here and we get price breaking the bottom, then we have a red rat reversal. Now, a rat reversal isn't the same as the rat zone. You can do a rat reversal inside the rat zone. See here, there's another one right there. You see these tops. So if you go short, price breaks below these tops, and chances are it's going to continue down. And that's an okay trade because, once again, it's in the rat zone. So it's not what the trigger is, it's when it gets triggered. So as you can see right here, price is going up. So you might want to let this candle close, and then we'll see if we can get price going down. So any trade entered in this area would be considered a rat zone trade. So I hope that helps explain what I mean by Larry live trade and rat zone. And you can see here, once again, we did take out the pivot, but still looking maybe to get that weekly pivot here at 24.35. And on the pivots, we still have 2 missed pivots this year and only 2 from last year. Now, 250 trading days or so, 240 trading days maybe. You can see here, if you miss twice out of a whole year, fading the pivot should be obvious to the listener here that it's profitable, right? Price action, once again, green at the line. Larry live trade, go green at the line here with 2 ball at the bottom. In and out of the wick zone. Still don't have a trade here. You can see slight upward on the ticks, even though it looks like we had the ass did drop below the peak, but now it's back above. Einstein line, you can see here all the short opportunities and long opportunities just by drawing that line when you started. Okay, fellow traders, I'm running out of time. It's not what you trade, it's how you trade it. Drain the banks.